Hey, Steve Saretsky here. Welcome back to the show. Quite a few things to touch on this week. First and foremost, if you're watching this video here on Saturday, it's election day in BC. Highly encourage you to go out and vote. I think it's going to be a very, very important. It's going to be a close race. It's a close race. I've already gone and voted myself. I put out a video last week. Last week, I put out a video detailing the platforms, the housing platforms for both the Conservative Party and the NDP Party. I tried to keep it as nonpartisan as possible to give you guys, an objective opinion on both housing platforms, economic platforms. So hopefully that allows you to make an educated decision to go out there and vote. Again, I think it's really, really important. It's a close race, so I'll be watching that very, very closely. We'll probably touch on the results in next week's episode. But in terms of like market activity, things we're watching, you guys know I touched on bond yields a few weeks ago and said, hey, listen, even if the BOC cuts rates as expected, right? We're expecting to see the neutral rate, the BOC's overnight rate around 2.5% by next year, that there might not be a huge movement in bond yields. Bond yields have already sort of done most of that movement. And of course, we've seen a spike up actually in bond yields over the last several weeks, pushing mortgage rates higher with them, at least on the fixed rate side. So will there be some relief on the variable side? Yes, we know the BOC is going to continue to cut. In fact, we just had another CPI print out this week. So headline CPI in Canada, the expectation, the consensus was 1.8, 1.9%, and we got 1.6% headline inflation here in Canada. So obviously soft. I mean, if for the BOC, you're looking at this and saying, okay, these guys are always worried about disinflation. It was the problem of the decade over the last 10 years. Of course, they finally got the bout of inflation that they so wanted. But now we're sort of back in that disinflation period. So central bank thought process is to basically ease for that. Of course, the labor market, we know the weakness there, the unemployment rate moving higher, and it's probably going to continue to move higher in the months ahead. So this 1.6% headline inflation would have been a lot softer, because what's still keeping it up is mortgage interest costs, which peaked at 30% and are now running at about 16%. So they peaked at 30, they're down to 16. They'll continue to come off as those base effects wear out. And then you've got rents, which are up 8.2%. And you guys know, I've been talking about in this channel for quite some time that rents in Canada's two largest major metropolitan cities, Vancouver and Toronto, have been declining. They've been declining for quite a while. Actually, they peaked over about a year ago, and they're actually declining in real terms. This is backed by data on rental.ca. So lo and behold, we know the inflation data is kind of telling us what has already transpired. This is not forward-looking data. We know that headline inflation is going to continue to sort of ease from here. So 1.6%. The markets, not me, the markets, people that, bet money for a living, that invest, that, take risks for a living, where they deploy capital markets are placing odds of a 50 basis point rate cut from the Bank of Canada next week. So that's what the markets are telling you. When Tiff Macklem gets a layup and gets the opportunity to say, hey, listen, betting markets are telling me that I need to go 50. They're giving me the opportunity to go 50. I don't need to spook and shock markets. They're giving me the opportunity to go 50. I think he's going to go 50. So you should get a 50 basis point cut from Tiff Macklem at the BOC. Even if he doesn't cut 50, let's say he decides to kind of go off script, you're still getting 25 next week. So we've got another cut next week. If it is 50, that'll be a cumulative cut so far of 125 basis points over the last number of months. And so what does this do to market sentiment here in the housing market? You guys know I've talked about it. I try to just give you the honest opinion of what's happening in the market. For me that runs a real estate business, I can make money in any market, up market, down market. Like we just service our clients. That's all we do. So whether it's going up, whether it's going down, truthfully, in my honest opinion, is if I have a balanced market, those are really the best conditions. I have time to take buyers around and actually tie up properties. As a selling agent on the listing side, things still move relatively quickly. There's some negotiations, some skill set involved. Those are really the best markets. The markets that move sideways are actually good markets for a realtor that like myself, those are good markets. So truthfully, I don't really care too much of what happens in the marketplace, but I'll just tell you and call it how it is. And I think that's why we've got the forum that we do on this channel, is because I'll just tell you what's going on. And so I think it's been an incredibly weak year in general for volume, housing sales. But what we've noticed though in the last 2-3 weeks is activity has picked up significantly. And truthfully, it was really just a matter of time, right? We're coming off really weak sales volumes. Mortgage rates have dropped, right? They've gone from earlier this year, kind of in the 5s, down to about, 4.1, 4.2%. Like you would imagine you should get some pickup, and we finally started to see that. We're seeing increase in showing activity, increase in offer activity. We've had listings that have been sitting in the market for 4, 5, 6, 7 weeks, all of a sudden all going under contract. So this is just what's happening. And again, I don't say 1 month makes a trend. This is not like, oh yeah, here it is, the start of the new bull market. No, but I'm just saying there's a noticeable increase in activity across the board. And next week, you're probably getting 50 basis points from the BOC. So it's worth questioning and saying, okay, what is the next several months look like? Are we starting to finally turn a corner? And again, it's not turn a corner that immediately you enter into a raging bull market, but you turn the corner from the doldrums where it didn't matter what kind of product you had, it just wasn't moving, to all of a sudden you have some liquidity in the marketplace, things are picking up, consumer sentiment's improving, and this is really all potentially on the backs of lower rates that help people afford and purchase housing. And so it'll be something to keep an eye on. You guys know at certain turning points, I'll come out and say, hey, when I see something concrete, when I see something for enough amount of time, I will tell you that what I'm seeing, and then you guys can, do as you so please with that information. So that's kind of what we're seeing in the marketplace. Again, I'm still worried about segments of the condo market. I still think the investors are going to be hard to pull back in the market. I think mentally and emotionally, they've been scarred about what happened with rates. I think the numbers still don't really work. I think that we're still going to see a huge pause and drop off in housing starts, permits. Nothing is going to get built for the foreseeable future. That market is completely pooched, but the resale market is picking up. We're seeing noticeable increase in activity, and I do think we're getting that 50 basis points cut next week. And so mortgage rates, as I've talked about before, the variable rate will continue to come down. Fixed rates might just be, again, 4 might be the new 2. But can people absorb 4? I think you've got enough wage growth passing through that people will kind of muddle along, will figure it out, and will absorb 4. And in the grand scheme of things, when you really zoom out, like 4%, man, that's cheap money. That's just cheap money. 4% is still relatively cheap money. It's not the 2% that people are used to, but 4 is still cheap, particularly when you've got inflation, let's call it, running at 3%, and the ongoing debasement. The things that I'm really watching for, following smarter accounts than myself, global macro accounts, is seeing the liquidity impulse, the financial conditions easing across the globe. You got China stimulating, you got the Fed cutting, you got the BOC cutting, all, the Eurozone cutting, everyone sort of easing monetary policy and seeing what assets are doing as a result, right? Gold, all-time high. Bitcoin, nearing its all-time highs. Stocks, all-time highs. So it's interesting because I think they're kind of front running this easing that is coming, and so we do have to start wondering, what does that do to things like hard assets? And you guys say, wow, this guy is all of a sudden bullish. No, I think I'm cautiously optimistic. I think that it's been a really tough housing market here in Canada over the last 2 years, right? It's been 2 years. And I'm not calling for a massive increase in home prices moving forward. But what I am saying is maybe we've sludged through the last 2 years and maybe you're finally turning a corner where things are starting to pick up once again. And don't get me wrong, there's still going to be troubled segments, troubled sectors. Again, the pre-construction market is where most of the problems and most of the pain are. And that is particularly focused actually in the GTA. There is a real crisis there. You guys know I've talked about it in my videos, and I think it's a huge part of the reason why Finance Minister Krista Freeland increased the CMHC mortgage insurance limits was really a quasi bailout for the development and the banking community to get pre-sales closed, to get pre-sales ramped up, and to help shortfalls in appraisal value. So again, still problems in large parts of the market, but seeing a noticeable increase in resale activity as we see more easing from not just the Bank of Canada, but central banks around the world. So we'll keep an eye on the bond market. We'll keep an eye on central bank policy. I'll update you. 1 month is not a trend, but it's something worth keeping an eye on as inventory probably drops off, as it usually does here, heading into November, December, January, and you ramp into your spring market in Feb, March. So as always, hope that helped, and we'll see you next week.